I think in any time you have a partnership, as long as that you both have shared values, and this was a discussion that we got into in an entrepreneurial meetup group as well, because there was some that were like, yeah, partnerships don't work. And then I was like, well, they do work really well if, and this is the most important part, is that you both have the same values.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Jack Gibson is a serial entrepreneur. He has 5 companies in different industries. He has a strong focus on financial education for entrepreneurs to build multiple streams of passive cash flow to protect their lifestyle and normal income inconsistencies. Jack, welcome to the show.
Thanks for having me, Sam. Pleasure to be here.
Hey, man, the pleasure's mine. There's 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start, where are you now, and how did you get there?
I started at age 19 from my college dorm room, and I got a flyer from another kid that was passing out. He was recruiting for a health and fitness distribution business, a direct sales business. Got started in that, built up a pretty large business over the last 25 years. It took a while. The first year was really rough. And then since then, I've launched 4 other companies. And then my main focus now is trying to help entrepreneurs and, earners that have income inconsistencies to be able to produce multiple streams of passive cash flow to help supplement or protect their lifestyle and build wealth responsibly.
Isn't that kind of the goal of the entrepreneur, though, is to build income and to build passive streams of income? So I guess the real question in that is, in what way are you helping them augment their income, their passive income?
Yeah, well, no matter what business that you own, you're always going to have, as an entrepreneur, income inconsistency. If you're a commission sales rep, you're always your income's going to flow in, it's going to ebb, it's going to go up and down. And that's even with my business, 25 years in, it's a more stable business, right? But it's still, there's some pretty dramatic swings in income. You can't help it. It's business cycles, seasons, et cetera. So what I found is that if you're relying on one stream, which is your business for your your lifestyle and to protect your family financially, it's really tough because you just never know what's going to happen from month to month or year to year. So I really am strong on when you're doing really well, you've got the harvest season onto your business. Make sure that you discipline yourself so that you're banking that extra cash and then putting that into other cash flow producing assets that are going to create, additional streams of income.
Got it. That makes a heck of a lot of sense. Are you moving people into income producing real estate, other businesses? What are you generally, recommending for people?
Yeah, I recommend the base level is always income producing assets, generally real estate, and that's always going to be your best, income producing plays. I love commercial real estate in terms of self-storage. It's no tenants, toilets, trash. You can sweep somebody's locker out in 10 minutes and then you got a tenant turn, right? So when they move all their stuff out. So with that, what I've found though too, you got to be an accredited investor in a lot of those deals for syndication to do self-storage. So that eliminates that option, unfortunately, for a lot of people. So they need to play the monopoly game, start with the 4 greenhouses and work your way up, trade those in eventually for a bigger deal. But ultimately, the goal, in my opinion, is about 80% of your total investable dollars should be into cash flow producing assets such as real estate. Short-term Airbnb rentals are great right now. Mortgage-backed notes, we like those. You got a really solid return that you can count on each month. So then with those streams of income, if you want to get a little bit more speculative, you want to get a little more aggressive, take those streams and put it into things that can really, 10x and really pop in terms of the appreciation, but are a little bit more risky. So you could lose the money, and then it doesn't matter because the income will just keep flowing back in from all your other cash flow producing assets.
Right. That makes a lot of sense. You said 5 different companies. Was that in 5 different industries?
2 of them are in real estate. We have the self-storage syndication company, and then the other is we have a company called High Return Real Estate, and we help investors get into turnkey, usually single family duplex type properties. And then we also just built out a brand new division for short-term Airbnb, and we help investors get into those as well. And the returns are looking really strong. I mean, we're moving most of our long-term tenants and those types of properties, either selling them off or, transitioning them as the tenants turn into short-term Airbnb. The yields are incredible.
They really are. They really are. And I've heard that from a lot of people, especially I think the pandemic really hyper fueled short-term rentals in a way that we probably didn't expect. But tell me, I guess when you look at these various, because I love what you're doing there. You've got the 4, what'd you call it? The 4 greenhouses to trade up for a red house.
Right.
Right. You can kind of service all your, all the different investor niches, with your different platforms there. You've got the single family home buyer, which is like, hey man, we're going to start with a single greenhouse. And then you've got your syndication business in self-storage where you say, okay, now you're an accredited investor. Now you can come in and do self-storage and then also move into short-term rentals. That's pretty fun. Are those all separate businesses with all separate teams operating and running them?
Yes. We've got for the short-term Airbnb rental team, we've got an acquisition team. We've got 4 or 5 different contractors that we personally utilized, and some of them we've utilized for over 100 different deals. And then we have our property management team. So yeah, we have all those teams running that. So that's a pretty passive business for me at this point. Once the teams are built out, obviously there was several years of hard work to build up, the systems and the procedures, operations. And then the self-storage is a syndication fund that I put together, and then we invest into one of my longtime friends, Sean. Funny, I met him at in Mexico. We both forgot our passports, and he was a baller, had his buddy fly in to Canada from another city in Canada, give him his passport. Then he got on the plane and he made it. And my wife and I were stuck in Chicago for a day. So I'm like, I want to be like you. What do you do? How are you a baller like that? He's like, oh, I do self-storage. I'm like, okay, tell me more.
Tell me more. Right. I want to learn from you. When you look back at your, building out all these different teams and especially having them in, while it's all in real estate, they're all their own unique niche asset class with their own particulars inside of those asset classes. What was a pivotal moment for you when it was like, hey, something was in the way and I was able to just get that out of the way, and then you kind of had exponential growth? Was there ever a point where something, switched?
Well, if you track it all back, it's where everything switched for me in terms of my mindset is when the stocks that I were in, both of them had, incredible drawdowns in value. This was like around 2012, 13. And one of them got a short sale attack. So that dropped the stock by 50%, like within days. Right. And then another one was called Interoil. I was writing options on that. That dropped in half overnight. And I realized, wow, I'm number one, I'm an unsophisticated investor. I'm relying on the whims of the financial markets to dictate my financial future. And I don't like it. I want to be in control. Right. So that's when I really dove in, studied real estate, and turned that adversity, those setbacks, losses, all of that. I figured, okay, I can turn this into something better. This is the motivation that I needed to be able to learn real estate. So honestly, that's what that started everything for me in real estate. And then once I got in, even though I've had some rough patches trying to learn, what to do, I'm never leaving real estate. It's just an incredible asset class. All the advantages, to me, it far outweighs anything else you can do, any other markets. And I love crypto. I love stocks. I don't love crypto right now, but I love the future of where I believe it's headed. And those, however, I can't build indestructible wealth with those types of assets. I need dirt. I need real estate.
That's for sure. Tell me about your team. Who was the first person that you hired when you said, okay, I'm going into real estate, I'm going long, but I got to build a team around me? How did you do that?
Most important thing for me was just finding a great partner. And I know a lot of people say partnerships. What is this? Dave Ramsey said something about partnerships sink ships, or it's a sinking ship, I think is what he says. Well, I have not found that to be the case. I have a great partnership with my wife for 18 years. That's amazing. And I've had a business partnership with Shecky. He's called Jeff, but he goes by Shecky. And we've been partners for 7 years, and we always work things through and work things out. So I recruited him. He was my digital marketing coach for my direct sales business. And I really liked his integrity. I loved his knowledge. And I knew I needed somebody like him to help me really market and scale to build that business. So when he came on, I gave him 50% equity, 50-50 partners. And he said, this is the first time that anybody's ever pitched me on like doing something business-wise with them that actually benefited me too. Like normally people would say they'd pitch him, but it was always what's in it for them. Right. And my pitch to him was, it didn't come across that way at all. So once we had formed our nucleus, then we started, building out all the other parts to the company as well.
What were some things, I'm sure that there were discussions early on that were, and I love what you said. They were like, hey, obviously it's going to be beneficial for your partners or for your partner as well. But what were some kind of discussions? Can you give some, or if you can remember it, give some color to those early on discussions? Because I think a lot of our listeners are probably, in that early stage of growth. That's kind of the name of the podcast, is how to scale. Like, so people are out there thinking, okay, I want to grow. But certainly, I would imagine you had some discussions where it was like, hey, what's this look like? Did you guys put in fail safes? Did you guys, how did you hammer out the what ifs in that scenario?
I think in any time you have a partnership, as long as that you both have shared values, and this was a discussion that we got into in an entrepreneurial meetup group as well, because there was some that were like, yeah, partnerships don't work. And then I was like, well, they do work really well if, and this is the most important part, is that you both have the same values. And therefore, if you're operating from that base level, that foundation, then everything else that happens, conflict resolution, working through adversity, working through differences in opinions, all of those things can become no problem instead of big problems if the values are shared. So our values, for example, we both really believe in, no matter what the cost, we're going to do the right thing for our investors. And we've taken some real hits with things that we kind of shelled out some money out of pocket just to help an investor, that was in a tough situation, those type of things. Or something went wrong on a certain situation, and it could have gone either way. And we pay for it, they pay for it. We generally take care of it. So we always, operate from that premise, and then both of us can work through, any of those challenges together. So yeah, I think a team, though, if you really want to scale, doing it by yourself, if you're solo, I don't see how you scale. You need to have a team. Like, I look at my other direct sales business. That's a huge business, but I put an incredible team of people around me that in a lot of cases, they're more skilled and harder working, more talented than I am.
I like that. I love the idea of coming from, the position of shared values. I think that's a really key piece of advice. How how did you discover, or what did you do to determine that your partner had the same values as you?
Well, I could tell the values just kind of come through. I think anytime that you have beliefs or values or things that are internal, eventually over the course of time, your true colors come out. Like those values come out through your words and your actions. So it was great because as my digital marketing coach for several months, I got to see firsthand, like, what is he made of? And I got to see how he handled, himself in terms of, did he show up on time? Does he keep his word? Does he always thinking about how he can help me solve my problem first, or is it what's in it for him? So I'm just looking at all those things and getting to know somebody like in that setting gave me the opportunity to kind of vet him, right? To say, do I want to extend an invitation to somebody like this to be a partnership? Because, if they're not on the same page as you, value-wise, beliefs, partnerships are going to be a pretty tough thing.
Yeah, absolutely. Absolutely. That's really, really cool. Thanks for taking the time, because I think that's not something we've heard a lot of here on this show. When you talk about building team or surrounding yourself with people that are, as you talked about, better than you. We oftentimes think of that in the hiring sense, but we haven't talked about it necessarily in the partnership sense. So thanks for taking the time to bring.
Yeah, my buddy Sean, he's got his self-storage company almost hit a billion recently, just in the last, couple months. And I texted him and said, dude, like, that's incredible. $1 billion business. Like, wow. I mean, I met you 10 years ago and it was not $1 billion.
Right.
And he said, I said, you're my hero. He said, if you want to do that, you've just got to have a great team. That's the whole key. Everything is, who are the guys that you're putting around you? And then are they smarter than you in certain areas? Okay.
Yeah. That's absolutely it. I love that. Let's talk a little bit about risk, what maybe you see in the market right now. And again, you guys are diversified from single family to short-term rentals to self-storage. Is there risk in the market right now that you see that you guys are protecting yourself against strategically?
Well, certainly there is an absolute chance of a recession. I think we're all probably speaking it into existence
Probably.
by what we're saying.
Right.
So I hate to even be a part of that narrative. However, I think that when you print 40% of the money supply in a couple of years, then I don't see any other case happening except something not good.
Right.
So and that's what we're starting to see, is something not good is happening from all this free money that was injected. There is no such thing as a free lunch. Mm-hmm. So however, I feel most comfortable in real estate. I think, right now, the financial markets, stock markets, crypto, I think there's some incredible deals and sales. Have we seen the bottoms in those markets? Who knows? I suspect probably have not. But either way, I'm not going to wait and try to time the bottom. So I'm buying into those asset classes. At the end of the day, I keep saying to myself, this is still a great time to invest in real estate. There's limited supply. They're not handing out, money to people that, should definitely not have the money. They're not doing that. So there's lending is a lot tighter. Supply is low. So I don't think we're going to see this big correction in real estate personally. I think we'll probably see something. However, if you're buying properties with great value, under market value, you're putting in effort to create value adds or increase the value through renovations or whatever else you can do to make the property more valuable and produce more income, then you're going to be fine. And if the market corrects, it's no problem. You have cash flow coming in. You don't care. You can ride it out. But those who are doing more speculative projects right now, I think you ought to be careful, because, we could definitely see something where your equity just collapses on those.
Absolutely. And that is something I've seen in all the investor conversations I'm having more and more of, is that even a couple of years ago, people were probably more focused on the, equity multiple and things like that. And everybody I'm speaking to right now just says, I'm just looking for cash flow. That's it. Let me buy a property that produces an income. IRR, equity multiple, who cares? I just want something that produces an income. So I love what you're talking about there. I think that's great. Jack, thank you for coming on the show today. Certainly appreciate it. It was great learning about you and your businesses, I think I should say. You've given us a lot of things to think about, especially as it pertains to how finding and having great partners here in business, and then, really just how to scale and what you've done. Certainly have enjoyed it. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
My website has everything, and I actually just launched a new book. It's called Building Indestructible Wealth. It's the 6-figure earner's guide to a multimillion-dollar portfolio. So I just lay out the strategies exactly. Actionable strategies are in there. So there's concepts. It's conceptual in nature, but there's also specific links to here. If you want to do this, here's where you go to do it, and how to get this particular strategy up and implemented. So that's on my book, or that's on my website. You can get the book right there, myindestructiblewealth.com. Also have a podcast called Indestructible Wealth and a blog. So it's all right there.
Awesome. Jack, thank you again for your time today. Certainly appreciate it.
Thank you so much, Sam. Appreciate the convo.